Righto, money miners. Welcome back to another week, boys. Great interest for the mobs that want a banner ad on the director's special, but I'm just saying it now. If you're a driller or a geological company that isn't using a Axis Champ Gyro or Axis Champ Ori, you can't sponsor.
It's actually a condition.
Yeah. So that is a conditions precedent because Axis Mining Tech are the bloody go-to, and we just can't deal with people that aren't using them. So public service announcement again.
Thanks, Matty.
Well said, Matty.
Yeah, too easy. Mate, when I'm on the shitter in the morning, flicking through Stock Nest Monster, I know whether it's going to be a good day or not. And there was a bit of action this morning. There's a couple of stories.
We got deals.
We got a show, mate.
We got regulatory rug pulling kind of, and we've got you've just been absolutely going deep on a few stories yourself, Matty.
I've contributed 3 segments today. Like, I cannot believe
Played a blinder.
You have asked this of me. I wasn't even asked. Like, initiative.
Best on ground.
Right.
Specialist fields person, mate.
Old sexy Rexy.
Yes.
Is bloody gone through the roof, up 60% with a bit of a takeover. The old one of the OG Aussie copper porphyry operations. IOCG.
Yeah.
Oh, there you go. Lucky you did. I didn't do that segment. I would have known that. JD, you're going balls deep into Canada and how the landscape has changed there, copper.
Mate, there's some pretty big news out of Canada, and I think Australia could be the lucky country again. So we'll get into it in a bit.
I'm going to talk about a company that is an exploration company that is heading towards a $500 million market cap, and I just want to clarification as to why, and a couple of bloody production reports out of the Goldies and a bit going on. Right, let's get into it. Rex Minerals, RXM, is getting bloody taken out by their major shareholder, effectively.
Pretty much, mate. Yeah, it's sexy Rexy. I reckon we're rolling with that. That's a great one. Historically, the ugly child, mate, but today it's delivering the goods, and so they've got this major shareholder called MACH. It's kind of a MACH, a subsidiary of Salim Group in Indonesia. They've agreed to acquire Rex for $393 million in cash, kind of fully diluted, or 47 cents per share via an agreed scheme of arrangement today.
That's that Salim Group owns bloody everything, don't they? Were they the one that owned that Atlantic Vanadium, I think, the old Windermere thing? I've got a feeling that
You're
was
all
them.
over it, mate. Yeah. One of the wealthiest families in Indo, as far as I'm aware, with interests across a whole bunch of industries.
Yeah, bloody loaded. Anyway, how's it look, Ricard?
Well, mate, it comes off the back of like a pretty extensive partnering process that was undertaken for years. I just remember this. It's kind of like similar to how we were talking about Chalice and their long partnering process the other day, and it kind of resulted in this MOU or whatever. Like Rex had similarly run a partnering process for the best part of the last 18 months, as far as I'm aware, and all that really came out of it was a non-binding MOU, about 6 odd months ago. And then I
think MOU actually stands for most overrated understanding.
There was one more thing that came out at Ricardinho that I remember. They did manage to shove down a bunch of change of control oppies and whatnot just along the way in case something came to pass.
I remember that one too. And yeah, like there was then in January they raised a bunch of money, and this MACH came on with 16% shareholding in the company, and so that's kind of what's happened up until this point. But it's a pretty damn advanced kind of copper project. Take a look at how a deal at such a big premium to last can kind of trade on open. Check out the spark chart, mate. It just goes crazy on open there, because it was, like you said, it was like a 70 odd percent premium to last close, like pretty substantial uplift there for existing shareholders who might have been a bit disheartened about what it looked like the outcome of the partnering process was. But here we've got pretty damn good news today. And so for those that aren't aware, mate, Rex Minerals, big undeveloped copper project out in South Australia on the York Peninsula there. They've got the mighty Hillside project. It's been around for quite a while. Historically, there's been some pretty big knocks on why this project hasn't ever been developed, and it's not for a lack of work on it, right? They've drilled the absolute bejeebers out of this for a long, long time. But the big knocks, if you were sort of talking in the market about Rex historically in previous copper cycles, has been, number one, the grade. So it was only 0.5% copper and 0.6% kind of copper equivalent. There's some gold in there too. The second knock was it was a bit of an upside down ore body. It's kind of like a mushroomy shape. It gets kind of better with life, but of course that inhibits your payback in those early years, which is a struggle to finance it. And number three, to that financing point, like the CapEx, as of late 2022, they said it was Aussie $854 million. So it's a big chunky pre-production CapEx there for, a moderate market cap. It's pretty hard to finance that by yourself, hence the whole partnering process and everything like that. So in past kind of copper cycles, it just didn't quite like stack up versus the South American undeveloped projects out there, because you're looking at operating costs like in the twos. But now today, change of control, a credible acquirer who's got real funding capability. I think there's validation today that this kind of asset is what is going to be developed going forward. It's these ones that have been around for a long time and they've had these knocks on them. But this is like, the copper market's fundamentally changed, and it's sort of like, we're reassessing and looking at these projects and thinking these ore bodies are going to go into production eventually. And Rex is kind of, fitting that bill now. Yeah,
the old Salim group might be thinking copper's a bit of a safer bet than vanadium. Because obviously chucked a lot of capital into that previous one. Yeah. So, and still could at some point. So
yeah, totally. Yeah. And how like some projects, they're so advanced that there's genuinely no need to raise any more money to do any more infill drilling or to do another study or anything like that. That's Rex, right? It's like it's a shovel ready project, drilled like crazy. It's IOCG, and these things, they go pretty deep, right? So you can think of the economics of a project like Hillside as, it's like the tyranny of the NPV model, to borrow a phrase from Robert Friedland. It's kind of like it's going to take you like 4 years or whatever to get your initial payback, but after that, it's kind of cream, and you've got all of this optionality that comes from expansion, and the mine life in reality is going to go much, much longer than, the stage one study, which is only 11 years. There's kind of like 40 plus years of actual mining. And then it's when you look at the NPV and you chuck a reasonable discount rate on it and you've got a big CapEx, it's hard to finance these things. But we historically in mining, we underestimate the optionality that comes from these big long life, mining projects over time. And that's kind of where it's like it's a big boys kind of project in a sense, because it needs the funding capability to develop it and get past that payback period and see the benefit. Yeah, and those big mobs like the Salim group, they love this sort of shit. Like they don't care about making the money back in the first 5 years. Like they finance it, and like it's as you said, if it goes for decades, mate, they're laughing into the future. They're just looking after their grandkids and stuff. And mate, remember gold, JD, gold in with that copper, mate. That's a fucking popular copper con to sell, mate. If you got some gold in there, you won't have a smelter that won't take that shit.
You're not wrong, mate. Talk to some of the latest PFS or whatever the last study they did was details, because I think the mine life gets lost on a few people. I can see you've got 11 years here, but you're kind of at diminishing returns and proving that out further, right?
Yeah, oh, totally. And I think it was like the 2022 optimized fees, I think it had a post-tax NPV of 847 million. So yeah, it's like, what was the CapEx was similar. So like 1 for 1, it doesn't really bloody knock the lights out by any sense of the imagination, but it's the optionality you get from that super long mine life that comes after that, which is attractive. So on those sort of, study numbers, IRR 19%, and then you got to wear all the risk that comes with actually delivering a project on time on budget. So you're prone to the economics not looking so great if you have a cost blowout. But to certain parties like who have a much longer term outlook and also are pretty bullish on the copper market, like that's where this sort of project falls into the category of like it's going to become a mine.
Yeah, and you look at look at that picture here, like the stage 3 plan, that takes it out to 31 years, and still open at depth. And you think if you were going to put a shitload of capital into something like a commodity, would you think one of the safer bets for volatility would be copper and gold? Or copper primarily?
Yeah. I mean, you're not questioning the demand case, are you? Like, and it's not like there's some latent supply of new copper that can just pop out of nowhere and surprise everyone. So
you might break even. or you might make shitloads. But like it's not like the copper market will ever die.
No.
a bit different to a vanadium project, Matty?
Very much so.
Yeah.
And I can see, I think
Salim.
it's worth mentioning they flashed through $3.92 US a pound on copper in that study, just to give you a sort of point of reference.
Yeah.
And I just think this outcome today, this takeover, it's like the best possible outcome for shareholders. You got this cash offer, substantial premium. It's just a great win for shareholders. Now, when they were doing this partnering process, this Japanese party in Tetsu, they got the early lead with this non-binding letter of intent to JV the project, and then, like I said, in March, then earlier this year, we obviously had MACH buying shares in January, not March. And so then there's some competitive tension, which might come about as well in some way, shape or form, because you've got at least two named parties who've got some degree of interest. One's got a binding bid on the table. The other one doesn't, obviously. And I imagine the bankers would have probably tried to, maximise competitive tension before entering a scheme deed, which we've got out today. But you never know. At least the fact it's an all cash takeover offer right now. If someone else wanted to come in and just go to smithereens with a higher offer, then go for it. But it's a pretty attractive premium. You might be thinking, damn, that's a big premium. Like, I wonder how they came up with that price, 47 cents. Where did that come from? Well, there isn't a ton of logic behind, just landing on a price sometimes. Sometimes there is, sometimes there isn't. But in some cases, we just anchor to what, where the old-time high was. And for Rex, their highest price in the last 10 years was 42 cents in May 2021. So sometimes you're just like, I just need to make sure the deal's higher than that, because that's what I remember my Max portfolio being. But there's another motivating factor, I reckon, that probably played some role in negotiations of this deal. And like you mentioned, JD, I remember last year, we talked about it on the podcast at the time too, 19th of July, Rex rolled out 30 million incentive options, 5 million to each of the three NEDs, and then 5 million to the CEO, CFO, and COO. And now those oppies that they kind of rolled out, like you said, they'd vest on a change of control, but importantly, they had an exercise price of 40 cents. So if you wanted them to actually,
make your money,
be in the money, you want to make sure the bloody takeover offer is higher than that.
Yeah.
Interestingly, though, when it came to voting on these oppies, the three that would go to the NEDs got voted down. So only the CEO, COO, and CFO ended up getting them. So, but yeah, those 15 million oppies, they're going to be in the money to the tune of $1 million there. So that's a good motivating reason to negotiate well.
And they also need, I think they need 75% of the shares to get voted in their favour, excluding the MACH stake, which is, I think, roughly 16% of the company. So exactly, I think the board and management from the Prezzo owned a bit under 3%. So you got to get everyone on your side to vote the deal up. Having board approval helps. So
totally,
it all sort of contributes.
I just think there's it's a super positive outcome for Rex shareholders. I also just think there's some pretty real implications for the broader market too. This is
That's just what I was about to say.
Yeah.
Good for Australia.
Good for Australia. It is. It's like this is the kind of, it's a big mining project, Rex. It was in South Australia, and the other knock on it too was if it's in South Australia, why did Oz Minerals never come knocking? Blah blah blah. But it's this big undeveloped project. The copper endowment is real. It's low grade, but it's big capex. If these are the kinds of projects that are now going to be funded and become mines, I just think there's a lot of these projects out there. Some of them are more financeable than others, and Rex is in the more financeable kind of category because it's a lower capex than some of them. But these big low grade copper projects are going to be the next lot of mines that be built, and they've been knocked a lot in the past, but they're kind of like the out of the money call option that is now kind of just getting closer and closer to in the money. And maybe the big pricing dynamic that we see today, the premium is just showing that those sorts of projects are, getting closer and closer in the money. And we love talk, mate. Nothing's got more talk than an option about to be in the money.
Yeah, I just like the international investment into an Australian project.
Yeah,
that gets me excited.
Yeah. Speaking of international investment into it, shovel ready Australian project. What kind of shovel ready? I'm not quite sure if that's the right phrase.
Is this number two?
Number two is Mt Bundy. So don't know
This
if you
just has in my head Ted Bundy, the serial killer, but for whatever reason. Anyway,
Mt Bundy is an undeveloped gold project in the Northern Territory. It was in the hands of Hank King. Now Hank King, they ended up with it when they acquired ASX listed Primary Gold back in the day. They're selling Mt Bundy for all intents and purposes for Australian $300 million to Huaning Gold, which I'm guessing has some association with Inner Mongolia Huaning Coal, who is acting as guarantor for this transaction. Mt Bundy is this big undeveloped low-grade gold project not too far from Darwin. DFS was finished on the project in November. Northern Territory, if you remember, they reformed their royalty regime in May. They went from this like profit-based royalty to an NSR, and now this asset has sold. And anytime I see like a Chinese company buying an asset from another Chinese company, I always kind of ask the question, is the price tag of the transaction the real market clearing price for the asset? Because, you know, we all know things can sometimes not be that way. But, you know, because this project, it kind of screens, when I look at it, it just screens similar to Westgold. For example, it's undeveloped, low-grade open pit. You know, Bundy would produce an average of 170,000 ounces per year for the first 5 years. It's mostly permitted, as I understand, low strip. So I just look. I think it's just an interesting transaction. I can't comment if the value is, you know, I'd love to know who was the second best bidder in this sale process. What was the second highest offer? Because I'm just not convinced that 300 million is the real market clearing price here for obvious reasons. But I just think
or was there a higher offer? And it wasn't taken into account.
Never know. Look,
what do you think about the FIRB perspective? I mean, it's an interesting angle, China to China.
Yeah, there's no certainty there, but I guess gold's not a critical mineral, is it? But I don't know. I just don't know how FIRB's gonna. It's not an expert there at all.
Well, Trav, it's bloody the two you've gone through today. They're as you've highlighted, we're getting into those big projects, lower grade, higher risk, higher uncertainty. I think it's alarming because we're not used to it. Like, because but these are the deposits we're heading towards.
Mate, when our grandkids will be like, 0.6% copper, that's fucking high grade. Granddad, that's the highest grade gold mine I've ever seen.
0.3.
Oh, look, yeah. Uncertainty means risks, and risk means you need CRE insurance. Like those two projects, they need to call them yesterday to start getting this shit in motion.
Totally.
Oh, mate, and we got the insight into what this Perth office does for international insurance jobbies, and like probably CRE Insurance would be the only company that'd be able to probably effectively deal with high net worth Indonesian businesses like the Salim Group for Rex. So that's got the CRE Perth team all over it. They're experts in translating shit.
These guys have dealt with, you know, stuff out in Burkina, West Africa. I think a little old project in South Australia is a walk in the park for the CRE team.
Mate, Indonesia's a walk in the park with them. Like, because that's the bloody company they'll be dealing with. So,
mate, it's not just the mining companies; it's the mining contractors use CRE too, because sometimes they get rug pulled like at Grosvenor.
They're another mob that if you aren't using CRE, you can't be a director's special sponsor. So many conditions. CPs everywhere now.
Love it.
Get onto them.
Go CRE.
Right, JD. The bloody North American landscape has taken a shift and could have some flow-on implications to a lot of the hopefuls over here. People are getting nervous with their wallets.
I think you're right, mate. There's quite a bit of news coming out of Canada on a geopolitical front, and it's got a huge impact on M&A in Canada as well as more broadly mining investing. And like you sort of say, I reckon we could be winners down here in Australia. So the Glencore Elk Valley sort of met coal sale got approved just recently. And on the back of that, essentially the Canadian government's come out and saying they're clamping down on any further M&A. So no secret that Canadian miners have kind of been picked at for a few years, and you've got a number of reasons why now they're saying enough is enough. And do you remember we've sort of spoken about this in the past, but it's a bit of an evolution from this stopping of state-owned, essentially Chinese companies picking up assets, picking up interests in TSX-listed companies, and now they're going much, much broader. So in their words, they're only going to approve M&A in the most exceptional of circumstances.
So JD, what does that mean? Are you saying that is anyone that's not Canadian, they won't approve M&A, or can Canadian do it to Canadian?
Canada to Canada seems fine. It is much more of a protection against any ex-Canadian, headquartered company buying a Canadian headquartered and Canadian listed company.
So Australia, Australia, like Australia's.
Even Australia, mate.
Wow. Wow.
Yeah. So I think a common thread in this sort of post-COVID world where, you got national security, energy security, all these things front of mind for politicians is, protecting your own country's economic interests, the interests of the country, looking out 10, 20, 30 years. And I think it's a pretty common theme that we're seeing around the world. So, if we were to put ourselves in the Canadian shoes, it's fairly understandable. I think a lot of us would have a pretty similar perspective if foreign companies were swooping in, buying all our sort of national champions.
Yeah, I don't know.
It seems far on the spectrum.
It's just like what's the unintended consequence of this sort of regime, and that's that you completely disincentivize, business dynamism in that country for all intents and purposes.
Well, you're essentially taking away why would you go explore?
Why would you incorporate your company in Canada? Why would you list it on a Canadian exchange?
Yeah.
Let's get into it. I think worth just skimming off a few of the big Canadian companies that are in question, and a few of these have been rumoured to be takeover targets in the not too distant past. You got First Quantum, 15 billion market cap, Teck, 26 billion. That's before the deal's closing in a couple of days' time. Capstone Copper, 8 billion. Hudbay, 5. Ivanhoe, 24 billion. Cameco, almost 30. Barrick, Agnico, Nutrien, Kinross, they're all fairly chunky companies. Obviously, you got a fair few goldies in there, and this new policy is strongly focused on critical minerals. So it's based upon their list of 31 critical minerals. And then if it sort of meets these standards, they run this net benefit review. And there you're talking about all the factors, economic, employment, industrial benefits. And it's pretty interesting to cast your minds back 14 years when BHP slung a massive $40 billion bid for Nutrien that got rejected on the grounds that it wouldn't be a net benefit to the country. So interestingly, that they're using sort of similar wording to that. And also worth pointing out that they're only going to run this on deals that have an EV of greater than $1.3 billion. Hence the Minister for Industry in Canada talking about these exceptional circumstances. He's referring to large-scale operations. 1.3 billion is the lower threshold here.
So, finish, JD, sorry.
Well, I think it just leads to exactly what you fellas just said. Is it going to hinder junior investment, and is it going to hinder the TSX? And, they're not stupid. They're trying to answer this straight up. The Natural Resource Minister has come out and said it's not going to limit capital available to the industry. To be clear, he said juniors can still seek foreign investment. But I find that, similar to how you guys just spoke about it, pretty hard to believe. I mean, from a very early stage, is a major going to come in and do a farm in with a junior if it's going to be difficult to get that deal done? There's so many flow-on effects, and it's particularly puzzling because so many of the assets that are generally in question here aren't even in Canada. I mean, look at Teck. Now that they've sold the assets, they have one Canadian operating mine, Highland Valley, and they've had restrictions put on them on the back of this deal that they need to go and invest more cash in the copper assets in South America. We spoke about Solaris, I think 3 odd months ago. They're TSX listed. They're developing the Warintza copper gold project in Ecuador. They had a deal for $130 million for Zijin to buy 15% of the company. That sort of puddled along. After 4 months, they canned it because it didn't get regulatory approval in Canada. So they are clearly like
that was just because it had a
protecting-
Canadian exchange listing, right? There was no, yes, it wasn't in Canada. The company, I don't even think was registered in Canada, but the Canadian government found a way to block it purely because it had a Canadian exchange listing.
Exactly. And I think exactly like you guys just said, they're talking about protecting the critical minerals players out there right now, but there's a super real risk that they'll chop off their, whatever the expression is, they are going to kill the future champions of industry in the process of protecting the current champions of industry. So it's pretty wild.
JD, does this put at risk the Paladin Fission merger? Fission's TSX listed.
Fission is TSX listed. They've gone a fair way to try and address a lot of those concerns. I mean, ultimately, I don't know. I don't think so. But I mean,
I think
very
the answer's
real.
no, because it's below. The Fission implied value
Right,
is below the 1.3 billion. And
but what about the deal? Is it the deal value or the company's
value of the target? Yeah.
Right.
The value of the target.
Yeah.
Yeah. So I mean, very real points of debate would be what happens to Next Gen and what happens to Patriot. I think the odds of a foreign company going and buying them just got even smaller. Yeah. I don't know about you guys if you had particular strong thoughts on that.
Well, like just the fact that it takes out, like Patriot, for example, it takes away Pilbara, Rio.
Yeah, I don't think it's a hard no, right? It's just more like there's going to be a bunch of terms and conditions about, maintaining a crap load of investment. Like Glenn buying these Elk Valley coal assets, they proved it, but then they threw in all of these like fucking conditionality into it, which like it's just a massive headache. So I don't think you'd have like these hard no's, especially when it's a positive trading partner like Australia. But I do
Met coal isn't even on the list of critical elements. So, but I do think Australia is a winner here. I know we're sort of kind of debating it a bit, but it makes deals harder. That I don't think that's ultimately too much up for debate. It is just another. You can debate how much harder it makes getting a deal done, but to an extent, I think the answer is that it does. And it makes Australia just more attractive. Exactly like you said, Trav. If you're not listed at the moment and you're tossing up TSX, LSE, ASX, I think Australia ASX was already the winner there, and now even more so. And I think it's pretty tough news for a lot of the companies and businesses in surrounding industries that sort of feed off of the mining, the exploration, the majors. The people just having a crack out there because there's a few less opportunities that they're going to be able to get into. And, potentially this changes under a change of government. We've sort of spoken about that in the context of the IRA in the States. And I guess we'll see in a year's time what sort of happens of that on that front. But the question I'm asking myself after reading all about this is there a way they could have tried to address this challenge in a much different way? Could they have made Canada a more attractive proposition through their regulatory framework, permitting developments, infrastructure, foreign investment, tax concessions, setting up liquid capital markets, making the TSX thrive and, get rid of all the ordinary behavior you see on the TSX, building, educating staff, people across the industries, all those sorts of things. That is way harder than just going and say, no, this deal can't happen. And obviously I don't know the answer to that one, but it's a tough one to answer.
The things you just mentioned, they all encourage industry dynamism, and blocking M&A for the fucking sake of it does the opposite. Yeah, I just
I think the benefit also goes to the big companies on the TSX, because now if they want to grow by M&A, they've got so much less competition in deals. Would you agree with that?
In the short term, but over the long term, if there's less attractive opportunities.
Yeah.
I mean, of course, they can still bid for companies overseas, but who knows? Maybe an overseas country says, hey, our companies can't do deals in Canada. Why should we let your giants come and do a deal in our country?
Well, you think let's look at Next Gen. Whoever wanted to take Next Gen, say if you take out all the non-TSX companies from bidding for that, Cameco are now thinking, oh, beauty, we've got heaps less people we have to compete against to put an offer in. So, don't know.
Yeah, I think
very interesting.
I think you're on a sort of good train of thought there. And
Fucking
to be clear, a lot of those things that I
day
just
for me, JD.
a lot of those points I just rattled off, they help industries, not just the mining industry. They help building out infrastructure that has positive flow-on effects to so many different industries, educating your up and coming students and people in your country. That has amazing flow-on benefits. And not that they don't have a good education system already, but I think there's a lot of benefits to doing a lot of those things. So we'll see if they try and go about it in multiple ways, or if this is ultimately the only way in which they go about it.
Okie doke. Next up, the bloody. I'll need a bit of counselling on this, because I'm either going to look fucking stupid in a long time, or I'll be right, or nothing will change. I'm not sure, but Encounter is now a $400 million market cap, up 21% today to 88.5 cents, and that is a bloody big humdinger of an exploration company. I'm gonna go through it. So just you can be devil's advocate, maybe. I think I'm being devil's advocate to myself. I don't know, but so they raised $10.5 in April this year at 22 cents. So it's 4-bagged in a few months. It's valued at a third of WA1's market cap today. And I'm like, holy shit, go the Westerunter. Now, remember the Westerunter, we could be looking at the most underexplored new mining hub of the world. We don't know. Hence why this bloody exploration money baked into this. So they've chucked out, Encounter's chucked out some niobium results today. Look, they're bloody good grades. So they've filled in the gap at Crean. So that's at the northern end of the tenement, away from WA1's Looney. So 46 metres at 3.1% niobium. Look, so not an extension, but like a strike infill of the 400-metre gap in the previous announced results. And then they also chucked out the Emily area, which is to the west of WA1's Looney, just adjacent to it. So that just infill results there, 16 and 20 metres at 2.7%. So both sets of results, in my opinion, are infill, because they're filling in gaps. There's no extensions or anything here. So it increased confidence, you'd say. I think they, like, the future drilling they've got, you'll see on the map here, if they start hitting stuff to the west of both Crean and Emily, which is still open to an extent, you can see, looks like Crean has about 1 kilometre to the west to be tested between holes that were drilled previously shown there. Looks about 500 to 600 metres to the west of Emily, that's still to be tested as well. But I'll bring the thing up here. Like, remember, WA1 has proven up over at 2 kilometres of strike, and in spots like, so that's over 2 kilometres strike and over 1 kilometre thick.
Ding, 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 Matty.
Of that. Oh, yeah. Ding, ding,
Ding.
dong. Unfortunately for me. And look, and they're, WA1's probably, a year or two ahead, or a year and a bit ahead, just put out the mineral resource estimate. These Encounter ones these are just air core results, so they've got to go back and twin all the holes with a RC or diamond to get anything into an MRE. So I don't know if the market's like today is like getting a bit excited about this line, saying that priority samples from Green have been sent for assays. So that's, you can see on the map here that Green is to the east of WA1's Looney, and that might be thinking if the priority samples are maybe an extension out that side as well. So anyway, I was just looking at third of the market cap, and WA1 already got 200 million tonne in a resource and proven up, and Encounter's still doing air core, but far out, it's just like, I don't know, it doesn't make sense to me. No, that is a fucking a fucking big market cap.
Normally, Matty, it's me that takes issue with big juicy exploration valuations, but yeah, at the same time, sometimes you can just end up eating your shorts.
Oh no,
as well.
and I'm probably gonna. But you think of like, okay, what is going to be a standalone project here? It's not going to be this one yet because bloody WA1 have got the resource proved up. They're that far ahead. They've got such a bloody thicker blob that they've proven up. Not saying that Encounter won't find one. And it's all met test works done and everything. And they've got 200 million tonne proven up, which means they are not going to be short of dirt and need to acquire anything near it.
So someone else can have a simultaneous come to market strategy on a smaller resource. And
oh God, it's fucking Australian vanadium and bloody.
Well, it's Altura and Pilgangora all over again.
Maybe. What was it? AVL and TMT all over again. Jesus.
Yeah, but yeah, I mean, if you look at the market cap and you try and back out, what's an NPV of economically extracting what they've got so far or anything like that. Like there's a lot more future exploration success probably baked into the valuation today, which
must be a lot.
Which is like it's seeming like it's a region that's primed for exploration success in some ways, but it's kind of hard to know what the probability of that is kind of ahead of time. That's some of the the quirks of exploration is like, heck, we're certainly not skilled at calculating probability of success, that's for sure.
No, I feel like you aren't as affected by this as me, Trav, and I thought you would be.
Mate, I remember having a bloody rant about how Azure was valued at Andover was valued at $1 billion when you included the Creasy stake and the market cap, and it had 8 holes in it. And I was like, this makes no sense. And I ripped into the Euros note who was comparing it with the bloody EV per ounce equivalent. Yes, sorry, Scans. It turned out to be right. It got acquired for a shitload. So anyway, I just hold myself back.
Oh, no. And this is what this is. This is like, it is valued at what some prick will pay for it.
Yeah.
And I might eat my shorts here, but I just don't know.
I'd be lying if that Azure episode wasn't in the back of my mind as well. 8 holes, it was just flying, and we saw how that played out in the face of a lithium price that was declining. But
don't know. Anyway, not going to be short of dirt out in the Western Runner, and MMS are going to move it.
Ah, yes,
they are.
Mineral Mining Services are going to move 200 plus whatever Encounter have, whether they get involved or not, they're moving it. I would, if any mining companies out there that are actually need MMS right now, I'd lock them in, because this Looney and Western Run is going to be a big job, and they're pretty much guaranteed to get those contracts. And I would say availability might be slim. So lock them in now for an open pit mining services contract before it's too late.
This is how good the guys are, mate. You give them your resource model and they say, let us optimize this, because we are the ones moving the dirt. Trust us, we can find efficiencies.
Own tech services team.
And they optimize the absolute crap out of it, which makes everything more efficient. It's just clever.
Guys,
JD, what?
I've heard the Salim group, they're getting in touch. They've got a big job out in South Australia. Going to be moving a shitload of dirt. So I'd get in now while you still can.
JD, what Trav said then about the tech services and my moving dirt thing, what's the first thing that comes to your mind?
MMS, mate. MMS.
Turnkey solution. That is it. Get in now.
Win.
Snooze, you lose. Anyway, I'm putting me cock on the block. I'm not saying nothing will happen, but I can't bloody, yeah. It was all the value before this was for a potential IOCG.
Yeah.
It's all on niobium at the moment.
Yeah.
Anyway, God, if they find one of those IOCGs, I'm really going to look fucking stupid. I can't let it go. Bogan agrees with me.
You've had a look at some companies that actually make a bit of cash as well. A couple of pre-quarterlies out today.
Oh, mate, Ramelius. They've thrown a curveball at us with a FY24 cash flow waterfall chart. I thought, this is different. But geez, I like it. It made sense. It was great for purpose. So first prize of the quarter goes to Ramelius. Zeppy, come in and collect your prize for a bloody good waterfall chart. even though it wasn't a quarterly one, but I liked it.
Easy to read.
Literally free, I'll bring it up, literally free cash build each quarter to show where the business has ended up in one financial year, taking into account their investments as well. So they've smoked it. So Ramelius added $174 to the balance sheet in a year, and that includes take off the $29 for the Musgrave acquisition, that obviously extra the last bit they had to pay, and $88 for the Spartan shares they've purchased, and $17 in divvies. So underlying free cash flow of $315 million. So, but remember, they did chuck in another $92 into Spartan just after the quarter ended, which is not included in this chart. So anyway, their position they're in, as we've repeated ourselves, really helped along by it's the penny sugar hit, as you say, Trav, and processing all the stockpiles from Edna May, which is sort of effectively ceased mining. So the very low OPEX are just bloody processing, trucking and processing. So she's flying. So it's not going to, wouldn't have lasted forever, but they've made hay while the sun shines. So onto the Spartan side of things. Remember, they maintain a 17.9% holding.
Ding, ding, ding.
Oh, yep, ding, ding, ding over there. Now, would you bet they're going to go to 19.9 soon?
They might. They might already be there. Like they could just buy that on market if they wanted. They don't have to do it.
Well, you'd buy it now, wouldn't you? Like at 93.8 cents when I last checked. That'll cost them another 20.7 million. And if you think a takeover at bloody 30% premium to today's share price of Spartan, buying the additional 2% right now can save Ramelius $6 million.
Mate, you're all about saving money. I got breaking news, by the way, as we're recording this.
Oh.
So the takeovers panel, they have come out and they're not going to rule on Ramelius's agitation.
Trav, you're a man that can read things quick. What's your first take of it?
It looks like the takeovers panel, they've decided not to make a ruling, but they've acknowledged some inadequacies in the non-solicitation part of the arrangement agreement between Westgold and Karora, and simultaneous with them coming out with this, they say that the amending agreement, so Westgold and Karora come out with an amending agreement, they've changed a few clauses. Technically speaking, when you look at those clauses that they've changed, technically Ramelius could make a bid now, but for
Westgold.
But the standstill agreement still remains on foot. So it's technically doable, but it's also impossible and just too hard. So I think when you digest it all, it's just too hard, I think, for Ramelius to actually agitate and make a play here. They'd
have to take Karora and Westgold together.
Possibly, mate.
Yeah.
It just seems like technically infeasible to do that. But
a menage de trois.
I just think that's too hard. Turn around, pivot. Look at Spartan now.
Oh, it could be a bloody 4-way mega merger.
It's all consolidating. It's just what order do you consolidate, right?
Yeah. It can't be done all at once. Jesus Christ. Oh, there you go.
Breaking news. Anyway, back to your segment.
Breaking news. So good quick read there, Trav. Well done, mate. Based on that then, we can even more now see the Ramelius Spartan tie-up starting to really get some legs, even more than the legs when bloody Ramelius took 17.9%. You remember the comments from Ramelius's last quarterly call, stating that upgrades will be required at Checkers for the break of day dirt, the must-row dirt, when it comes along. I'll just play it for you quickly.
In terms of access to the sweet spot of Q, which you're obviously very familiar with, assuming we get started early in the financial year 25, we probably expect to see that early calendar 25, so sort of January 25. To that point, we're actually looking at what we need to upgrade. It's a nice problem to have in terms of the Mount Magnet, Gold Room, gravity circuit, electrowinning circuits, because if we have the break of day, white heat, high grade zones coming in with penny in full cry, we need more gravity and Gold Room capacity, if you like.
So, looking at I love a good map. let's look at the map. And we've mentioned this before. So it appears that break of day mine will be about 80 Ks from Dalgaranga, from Spartan. So it would make sense, I think, that instead of upgrading the Checkers mill to process this break of day dirt, wouldn't you, maybe all the upgrade money will be going into repurposing the Dalgaranga mill to handle both the Spartan dirt and the break of day dirt, and the Checkers mill will remain as is for that Mount Magnet long-term plan. So whether that's what's playing out in the rationale behind what Ramelius is doing, we will wait and see. So because we did say previously that Ramelius can't put in a bid for Spartan for 4 months after that initial raid, where they indicated on the raid document, we'll call it, that they don't intend to make an immediate offer, and that 4 months was part of the truth in takeovers. But talking to some, you'd say, unrelated parties.
Ben Bailey.
Are we allowed to say that?
Yeah, he tweeted it.
Oh,
he clarified. Yeah,
cheers,
thanks,
Ben. And he's unrelated. It indicates it's possibly a grey area as it's pre-bid. So, because truth in takeovers mostly applies once the bid is made. Mm-hmm. So, not going all in, that's 100% correct, but it appears to be a grey area.
I think it's play on. So
we don't discount the possibility that Ramelius could lob a bid during this 4-month window, which I think has about 3 and a bit months to go. So.
And they clouded it in enough doubt when they said does not currently intend to make a takeover offer, subject to any behaviour from Spartan or any other third party. There's just so much conditionality applied to that you just play on.
Yeah. Anyway, next Goldie, Regis added a good chunk of cash this quarter.
How much?
$109 to the balance sheet.
Mate, it's cash printing time for some of these Goldies. I mean, they're now unhedged, right, and they're benefiting from it. And big production profile, gold at all-time highs.
Yeah, they've now hold cash and bullion of $295 worth. So just scraped in the lower end of guidance with 418,000 ounces. So Tropicana missed the lower end of their guidance by 7,000 ounces for Regis's 30% share, and that's being blamed on more rain impacts at Tropicana compared to Duketon. So they're 400 Ks apart. So we'll accept there may have been some rainfall variability. But sure as hell helped along by closing out the extremely out-of-the-money hedge book that old Jim Bayer inherited from the Clarkey days at Regis.
You know what you never see, Matty? An announcement that says we got less rainfall than anticipated, therefore we produced more.
Yeah.
You never see that.
No. I want to see that.
Yeah.
Someone please put that in.
Matty, on the point of inheriting the hedge book, you're spot on, but he could have closed it out a long time ago himself as well.
Could he? Could he?
Well, because
they'd have had to raise equity. Buying, obviously they paid top dollar for Tropicana, but it's the ounces from Tropicana that helped service the hedge book as well.
But what was that, 2020?
Yeah.
Yeah, no, but you got $300 worth of debt from that acquisition as well. Like, would have you had? It cost them $98 to close out that hedge book. So
yeah, I mean the hedge book could have been closed out before the Tropicana acquisition, no?
Well, when they raised the money for Trop, they basically said that if Anglo exercises their right of last refusal or whatever, then they would put that money towards paying off the hedge book. So
yeah.
Anyway.
Yeah. Well, because they closed it out December last year, so there was 63,000 ounces remaining, hedged at 1571 Aussie. So they've made money on it. Went back to the old, you'd say the king of gold, Tim McCormack, loves gold, that fella. On their Canaccord numbers, they said they'd have to for half 2/24, they'd have to average above a sale price of 3,090 for the gold price for the hedge book closure to have a positive impact on free cash flow. So I'll bring up the gold price chart here. Looks like it's averaged about $250, $300 above that. So it's been a very positive thing for Regis for this half based on the behaviour of the gold price. So But yeah, don't forget that Regis have got that 300 mil bullet repayment due 30th of June 2025. So that was from when they purchased the 30% stake in Tropicana. So they're building the cash pile to satisfy that repayment. Still unsure what's going to happen with McPhillamys, whether that could provide an option to sort the payment out as part of a bigger finance facility. We're unsure if anything's even going to happen with McPhillamys. We're unsure what the hell's going to happen with the bloody South 32's legal claim against IGO and Regis regarding the Tropicana royalty. Also unsure if Regis and Gold Road are going to get together. Pretty much I have no fucking idea what is going to happen from here on in regarding Regis
I reckon
with anything.
I reckon that happens, eh?
Gold Road Regis.
I reckon it does. Yeah.
Oh, but just the legal case would have to be friggin' bit of a weight on it, eh?
Oh, I don't know. You just
Baker into the deal, Trav.
Baker into the deal. Yeah, I reckon that deal happens.
Yeah. What do you reckon, JD? Because I don't know what's going on.
What's the sort of time frame you'd put it on?
Well, it's that bullet payment's a big payment in a year and a bit's time. So you'd have to something's going to happen between then to sort that out, or whether they're just going to dump cash on it because they got the cash right now. A bit short, but
they could refinance to an extent, somewhere or another.
Partial payment or refinance or something. Yeah. But I think it'd be who knows? A lot of cards in play.
In the spirit of putting a carton on the line, I'll take the other side of it, Trav, for the remainder of 2024.
I reckon Gold Road and Regis are the same company before. I reckon there's an announced deal before the end of the year.
Yeah, well, we may as well take the other end of it, make it a bit fun. Maddie, we still got one on the line as well. We've got about 3 weeks to go on Bellevue.
Raisin Dosh.
Yeah. It's still up for grabs, maybe they don't want to reveal things in the quarterly. They come out with it. It's not a foregone conclusion yet.
Yeah, I'll be, I can't wait to see their numbers.
Oh, pumped.
Costs. Good stuff, lads. Groundbreaking, as always.
Good work, Matty.
As always.
Righto. Thanks to all our bloody GC best friends. We've got a few, don't we? Love G.
Quite a few.
I don't know what to say.
Axis mining technology, drill hole survey, instrumentation experts, plus the ones we had in the show, Matty, mineral mining services, and CRE insurance.
Hey, we've also got VRIFY, GetWet Solutions, DSI Underground, Silverstone, WA Waterboards, K-Drill, and you would have seen some Spark charts. Get Spark and you can see them yourself.
Hooteroo.
Hooteroo.
Information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation, or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation, and needs.